For Ethereum specifically, or more broadly, I think more broadly what you're seeing is these institutions trying to find ways to get into the space, and they're willing to do things that fit into their mold. And so fund structures always fit in, swaps always fit in. They do this already with every other asset class in the world. So doing it inside of crypto is no different. It's just a different thing. What's driving that is people want to get exposure to it. They see the need for it, and they have a desire to actually do that.
But with Ethereum and institutions in particular, because it used to be that Bitcoin was the space that institutions would go to, the asset rather, in terms of the crypto world. And now are you seeing more and more institutional interest in Ethereum?
Absolutely. And I think that there's two factors. One, as people become educated in the space and they understand what the value proposition of crypto is, they start to understand the power of smart contracts, that layer one that so many brilliant minds can build on. And Ethereum is that's the copper. If Bitcoin is the digital gold, Ethereum's digital copper. It allows for the ecosystem to be built in so many ways, as do the other layer ones. And so people stepping in and wanting to do that is important. ETH 2.0 is another driving factor. So the fact that we're moving from a proof of work universe to a proof of stake universe, I think there's ESG implications, there's scalability and things that now become very valuable and will allow ETH to grow. Right. And so smart institutional investors are seeing that and they're saying, hey, this could be the next thing.
Well, because of ETH 2.0 and the fact that it is then going to create a more ESG compliant crypto, is that driving institutions in to such a degree that we may see more institutional money going into Ethereum than Bitcoin? Because of the whole energy consumption angle and ESG.
There is an ESG component, and if you think about ESG, I mean, more energy is used in running YouTube than it is to run the entire network. So there are offsets.
But perception, Jason, perception.
Listen, there is a narrative that our industry has definitely lost, and so do I think that ESG is the sole factor? No. Do I think that helps? Yes, right. Absolutely.
So do you see the flippening, as they say? Do you see Ethereum's market cap, number 2 at the moment, overtaking that of Bitcoin's?
I think at some point, yes, but is it imminent? No. Do I think it's something we're going to see in the next 2 to 3 years? That's probably the soonest. And I, again, could be wrong on that, but I don't think it's anytime soon. Do I think that it could happen, or do I think there's something else that we haven't even discovered yet that could be the next thing, right? If you think about If you use the internet as a roadmap, they were the first doesn't always necessarily mean you're the one that won, right? I mean, look at Netscape versus Google, right? Netscape was first, and now we all Google everything. So there could be something else as innovation grows and as innovation is driven forward that you could see this change a little bit.
Well, to that point, could there be something else then in your mind that replaces Bitcoin?
But that one's less likely because it's so entrenched as to what it is. Is always or never. Those are dangerous words in the trading business. And so is there something that could? Yes, theoretically. Is there anything that I see on the horizon to replace Bitcoin? No, not today.
Okay, so potential flippening in 3 years' time for Ethereum overtaking the market cap of Bitcoin. Let's focus a little bit more near term. What is your Ethereum outlook for the end of the year, price-wise?
So there are a few factors that can impact this, namely the Fed and what the Fed is going to do, inflation, war in Ukraine. If you had asked me at the start of the year, I would have said I see Bitcoin at 100,000, ETH at 6,500, 7,000 in that range. Do I think that there's headwinds to that potentially? Do I think that it's going to matter? No. So if it's not the end of the year, it could be Q1 of next year, Q2. It is going to happen. The sheer number of people that are stepping into this space, I feel are going to just continue to, push that, and the fact that there's such utility. People don't always see the utility because they don't maybe understand, but there's such utility in this ecosystem.
So Ethereum by the end of the year,
6,000.
6,000 Bitcoin by the end of the year?
100,000. When we talked last, a lot of the large institutions were still very aspirational and how they wanted to attack the space. We saw back half of last year them stepping into the space. Now we're seeing people really afraid of missing out. You know, there used to be that crypto as a whole was a career challenge, and you know, getting in could destroy your career. Now not getting in can be a career limiting move. And so we see people finding ways, and everyone has to find their path that fits with their culture, with their regulatory status. But we are in the second inning, and there's a long way to go still. They're recognizing the value of it. And so by recognizing the value, then there's also the people that don't understand it, but they see other people. So that's the FOMO component. I think that the people who are in the know are like, this is transformative, this is going to change the way finance is done for the next 20, 50 years, and we need to be there. And then the people who see their competitors moving in are like, well, so-and-so got in, I need to get in as well. I would say you're probably 15% of the institutions are doing something, dabbling in some way that makes sense to them. When you think about trading derivatives specifically, it's very important. There's two factors. One is making the right call, and the second is making sure you're going to get paid for making the right call. And I think it demonstrates that as large institutions are coming in, one, they're picking Galaxy, which is great for us, but they're picking some of our competitors as well to deal. And I think that it's a big step because it really is that blending of TradFi and crypto coming together in a way that makes the next step so much more attainable. I think it's a symptom of a broader problem, which is regulation. And there are defined rules for trading swaps and trading derivatives. So it's very easy to create a swap or a derivative that fits to an existing set of rules. Do people still want access to the underlying native crypto? Absolutely. Do we need to have a better mechanism, an on-ramp for that? Yes, there are retail exchanges, but there's less visible solutions on the institutional side. And so these things being there, I don't think that they create a concern. I don't think you can think of derivatives as weapons of mass destruction. As a matter of fact, crypto as a whole is very underlevered relative to every other asset class in the world, just given the nature of it being a bearer security or a bearer asset. Right. And so people are reluctant to just give out crazy credit inside of the space because you can take those assets and disappear. It doesn't allow for more manipulation. What is it antithetical to what is the underlying core of crypto? In some ways, yes. But I've always said, do you want to be right or do you want to be happy? But if you want to be right and you want to make this, something with, steeped in anonymity and it's kind of a flies in the face of government and regulation, that doesn't allow institutions to adopt. It doesn't allow real money to come into the space. So being happy means, hey, we're going to bring in the institutions. They're going to want to trade tools that they know and are comfortable with. They have mechanisms in place already to account for. And so that will have a trickle-on effect into the asset class until such time that those institutions are able to make the move.